welcome back for another video. As usual, everything I talk about is my opinion. It's not financial advice. Please do your research and let's just get into this now. So we'll start off with an article on CCN. Leaked crypto exchange user data doesn't affect our accounts, says Binance. So let's see what's happened here. Binance, the world's leading cryptocurrency exchange, has recently put out a statement claiming that the leaked cryptocurrency exchange user know your customer (KYC) data isn't from users. It uses digital watermarks on every picture it collects. Recently, CCN revealed a hacker going by exploit. Was selling leaked KYC data from cryptocurrency exchanges user Sun, the dark web. After seeing 3 pictures of individuals holding up a piece of paper with the word Binance and the date of the picture was taken at them in them, while holding their identity cards or driver's license next to them. While these had the word Binance in them, the hacker advertised KYC data from leading crypto exchanges including Bittrex, Poloniex, and Bitfinex. While initially the cryptocurrency community largely dismissed the reports as fake news, soon the hacker posted proof that she does have leaked KYC images from crypto exchange users after seemingly feeling provoked. So let's see. In correspondence with CCN, Binance has now revealed it has evidence indicating the leaked KYC pictures are not from Binance accounts. In a statement, the cryptocurrency exchange noted security is the top priority and it has various measures in place to ensure safekeeping of its customers' information. Binance KYC data, it adds, is stored and indexed with fine-grained permission control and further protected by stringent security audits. The company was able to conclude that photos aren't from Binance accounts after it found these don't contain a digital watermark it adds to these images. The statement reads, to elaborate, in regards to the image data we collect from our customers during KYC process, every image that the Binance system processes for KYC purposes is embedded with a hidden digital watermark. These watermarks, Binance noted, are only perceptible under specific conditions, and it allow embedded information on each personnel that has initiated image-related operations, as well as the photo of the source and relevant audit details. So clearly, Binance have proven, or it seems like it's proven, it wasn't them. The article goes on to mention that Bitfinex put out a statement. We want to ensure our customers that Bitfinex is aware of this situation and confirm there is no security breach to our platform. As always, if there are any queries, please get in touch with the support team, blah, blah, blah. Okay. So where the data the hacker leak comes from is currently unclear. After being in a spotlight, she announced a nickname change to avoid unwanted attention. So what does this really tell us? 2 things. 1, Binance, fantastic, doing and clearly security is paramount to them. And obviously, no exchange company, regardless of its crypto or any exchange, doesn't want data stolen. We saw what happened in 2011 with Sony got hacked and like 60 million accounts were stolen, and the PlayStation Network was down for what felt like forever, because they hadn't encrypted user data. It was unencrypted data. They had to pay some fines out. They gave away some free games, which were a rubbish choice in my opinion. So that went on to affect Sony's share price. This is a little bit more serious when it's with crypto. Once it's lost, generally. So what Binance have done here is they've obviously taking security very seriously. We don't know where this information is coming from, but potentially there is some stolen data. Fake news or not fake news. The other thing this does tell us, which is more important than anything else, is the risk that individuals take about keeping large amounts of funds on exchanges. Now, I've gone over this before, and even there was a quote from the Kraken CEO saying that you should only keep what you're trading in. So essentially, storing most of your wealth away from exchanges, which I mean, may cause a bit of a liquidity issue what flows to the exchanges, but if you're not going to do anything with your money, why should it be an exchange? I mean, if you're going to keep $300 or $1,000 potentially out of the 100,000 you've got stored offline, that's not. I don't think that's too bad in my opinion. But if you're storing 100,000 on exchanges, whether it be Binance, Bitfinex, Bittrex, Polynex, Kraken, wherever it is, you then risk having that data unobtainable or stolen. So we've seen what's happened before when certain cryptocurrency websites, exchanges, block the transfer of certain currencies at that time because of high flow, and they don't want a lot of sales coming out of their currency exchanges. I had that personally with an exchange where wasn't allowing deposits out, and if it would eventually, it was like maybe 2 deposits a week. So yes, KYC data is important that we provide this to exchanges to be able to purchase cryptocurrency. But I think the message out here is, again, reiterating for the millionth time, look at where your money is stored. Is it in a safe place? Do you feel safe? Would it be safer offline where you have your own private keys? And it keeps going back to the whole essence of why crypto was invented, why blockchain, why Bitcoin was invented. Taking control of your own money. Again, nothing wrong with keeping some money on certain places for to buy or to sell, but majority of it, in my opinion, should be always held offline. What do you guys think? Have you guys heard anything? I mean, I've not really seen anything come up about whose data this is, or is it just fake data? Is it? We've not seen anybody else coming out like Polynex or what's the other one? Bittrex, stating it wasn't them. If there is KYC data on sale, that's not a good thing because that contains people's address, name, date of birth, their face, and obviously that's a bit of an identity theft issue going on right there. So be careful where you supply your information. Be careful where you hold your currency. And let's move on. Bitcoin could fall below $1,260 if the bear market continues, JP Morgan analysts. Let's see. Wall Street firm JP Morgan has predicted that the hodlers should expect to experience more pain if crypto winter persists. Yes, it's very cold at the moment. According to JP Morgan analysts, the price of Bitcoin could fall as low as $1,260, Reuters reports. The same analysts, however, have estimated that Bitcoin cost support is around the $2,400 level. This sentiment is similar to that is held by Chinese currency policy analysts. As CCN reported earlier this month, the analysts expect permission to dominate with regards to Bitcoin in 2019. Bitcoin price above weekly low. Currently, Bitcoin is trading above the weekly low of $3,500 that it reached earlier this week per prices quoted by Bitfinex. Yes, it was a bit of a support level created there. In the same report, the JP Morgan analysts also questioned the purpose of cryptocurrencies. The Wall Street firm noted that cryptocurrencies had no value in reality. Consequently, they would only make the sense in a situation where investors had lost faith in the current system. Per JP Morgan, this would only be the case if faith in the US dollar and gold got eroded. Additionally, the global payment system would have to fail for this to occur. In the extreme scenarios, such as a recession or financial crisis, there are more liquid and less complicated instruments for transacting, investing, and hedging. JP Morgan analysts talking the same language as CEO Jamie Dimon, our good friend. So, let's see that security flaws and Bitcoin volatility is still scaring away institutional investors. Tell that to ICE and Bakkt then. Per JP Morgan's asset management pension funds are still apprehensive about security flaws and volatility. Additionally, the propensity for cryptocurrencies is to be used for illegal purposes was also scaring them. Really? That's still on the market. We're still talking about that joke. The Wall Street firm also added that Bitcoin was unlikely to become a major means of payment in 2018. JP Morgan pointed out no major retailer hit the headlines for accepting cryptocurrencies. Well, wait till Bakkt. However, JP Morgan added that the opportunities exist for the use of Bitcoin as a payment method. This was in marketplaces when the control over payment methods is in the hands of small enterprises and individuals. So again, they're kind of like purporting that sort of blockchain idea. So yeah, we're not in a good place at the moment generally, but it's a good place to buy. And always, let's not focus too much on the price instead of implementation of what's happening. Now the obviously good news that the shutdown is supposedly over. We can get back to business. The CFTC can now open. ICE can get their permission, and we can launch Bakkt. And then we'll see which companies do and do not use Bitcoin. So we know Starbucks and Microsoft, and whether there'll be others. This point about keep talking about where is it about people investing and they feel that cryptocurrency is to be used for legal purposes. They did a study. More fiat currency clearly will be used for illegal purposes. The U.S. government or governments are probably happy for people to use Bitcoin for illegal purposes because they can then track them and arrest them and prosecute to the extent of the law. So it's probably better to use cryptocurrency, especially Bitcoin, because you can track payments. You can't do that with cash. So I don't know what happened. I don't know what using this line still means in 2019. It's clearly been proven that it's not used for illegal activities compared to fiat. Yeah, I mean, I don't know what security flaws. If they're talking particularly with Bitcoin, I don't know what security flaws and volatility. You tell me one place in 10 years that Bitcoin has been hacked or attacked or had a 51% attack or a double spend. It's not happened, so that's nonsense. How many times have banks been hacked and money's been stolen or data's been stolen? These are what's it called? Naive answers to someone who should be doing research if you're an analyst. Yes, we are, of course, and the Bitcoin price could drop, and we obviously, if it drops below the level of $2,400, which is probably the economic value, which is at the moment what it sounds like is the mining value, then we're a bit of in an issue. But again, let's not focus too much on price. Let's focus on what's happening and what's going to happen in the next few months. Now, hopefully, the shutdown is over and we can move on, and maybe Bakkt can get on with getting this approval sorted. So, will it drop to $1,260? Yes, possibly. I mean, we don't know that. At the moment, we're just moving sideways. It will have to take a major drop for it to go from around 3,500. Let's have a look what it is today. I think it's slightly up to, in fact. It'll take a major drop. Oh, good, it's over 3,600. So it'll take a major drop to go from $3,600 all the way down to $1,260. That's a $2,380 drop for it to be around that mark. So something really, really, really bad needs to happen for it to get to those very much lows. But if it dropped to 1,260, I think a lot of people, including myself, will be looking to secure funding to buy more Bitcoin. It would have to drop to that point where something catastrophic happens, but not catastrophic enough that it doesn't go to zero or even below that. So you have to think, what is the low? And we're still looking around the $3,000 mark as its bottom price. 1,260 is incredibly low, incredibly good time to buy. So yeah, let's see what happens with this article, and are they going to have pie in their face in 12 months time or in 2020? Let's move on. More comical news here coming out of Davos, which is obviously we've got the World Economic Forum going on, which is probably finished by now. Bitcoin trolls rip crypto at Davos. Overhyped blockchain is no better than Excel spreadsheet. That's not very nice. Bitcoin and cryptocurrencies are the mother and father of all bubbles, and blockchain is nothing more than a fancy database. What's that Bitcoin dashing New York University? That's what Bitcoin dashing New York University professor Nirel Rubini said at 2019 Blockchain Economic Forum in Davos. Yes, we know New York isn't very favourable to crypto. Speaking at a one-person panel, perhaps so no one can challenge, his anti-FUD crypto FUD, Rubini gloated that the current bear market. He insists that he was proven right in his rabid, long-standing opposition to Bitcoin. Nothing's been proven. If blockchain disappears and Bitcoin disappears and everything else disappears, then we can have a conversation. At the moment, we're just in a market which is being over-manipulated. Moreover, Rubini says crypto and blockchain have no place in the upcoming fintech revolution because they're merely flashes in the pan. I think blockchain is the essence of fintech. I do believe there is going to be a revolution in financial services. The revolution is called fintech, Rubini said. But my reading of fintech is that nothing to do with blockchain and nothing to do with crypto. While Rubini's anti-Bitcoin stance is nothing new, his wholesale dismissal of blockchain sets him apart from other mainstream crypto. Yeah, exactly. I think most people don't like Bitcoin, but like blockchain. Even prominent Bitcoin bashers like billionaire founder Bill Gates have praised blockchain as a game-changing innovation that could revolutionize banking, supply chain management, and healthcare. But Rubini remains unconvinced of its merits. What we're seeing with blockchain has already been done in the private sector, where the IBMs of the world, he claimed. Besides, blockchain is an overhyped, fancy database. There's no better than Excel spreadsheet, he huffed. Nero Rubini, crypto has no future. Rubini also says that a cryptocurrency-based payment system would never succeed because it's inefficient and slow. XRP, any crypto payment system is a problem. Besides, most cryptocurrencies are not currencies anyway, he insisted. So, okay, I don't want to keep reading on because he just this guy is waffling and doesn't understand what he's talking about. So he is a university professor, and I don't know what he's actually a professor in. It sounds like he's probably a professor in English or something because it clearly doesn't understand what fintech is or how it works. So let's dissect what he's got to say. It's a fancy database. Yes, you can have some potential merit to that. It is a database of ledgers, but you're looking at the complexity of simplicity. It's databases, yes, but it's a replication of a database to prove integrity. And I keep talking about this word integrity over and over again. If you've ever studied databases or studied computer science, then you understand that integrity for a database is very, very important. As long as the information is correct and is replicated, then you have a solid system. Now, go somewhere, go to a bank, and half the information they have on you will be different to what another bank has on you. And you go to a health service provider, and they may not even have the information that where you locally are a resident of your local doctor. So blockchain and the idea of DLT is very important for the healthcare industry, very important for banks, very important for government sort of run enterprises like surgeries and dentists and hospitals, police. If this person is saying this is overhyped, this is probably, which we spoke about yesterday, probably the second, or if not joint, most important thing that has ever happened in our lifetimes since the internet and Internet 2.0. So for someone to come out of this and have no panel, so nobody can criticize what this person is saying, it's almost like watching Fox News, where everybody on the panel has the same consensus, and there's no discussion. It's literally this person is just dictating to an audience of whoever it may be, and he's indoctrinating them in his naive, uneducated, lack of information, lack of research, speech or talk or wherever it is. How can this person say that blockchain is a flash in the pan? You have data, and I spoke about yesterday. Data is the most precious thing we have right now in the 21st century. Data is what everybody wants. Google wants data, Microsoft wants, everyone wants data, but they want correct data, and also keeping it private for yourself. And if you look at what did this person say about Rubini also says that cryptocurrency-based payment system would never succeed because it's inefficient and slow. So I believe Swift can do something like 25,000 transactions a second. We've got potentially Ripple, which can do, obviously it's quite low at the moment, I think 2,000 or 3,000. You've got Tron apparently, which can do something like 10,000. So if Tron, which isn't a top 5 cryptocurrency that I remember, it is in fact 9th, can do 10,000, we're not too far off, and it's cheaper and it's better tracked. So you're telling me it's inefficient and slow. The most efficient way to transfer money and to see it in real time, and no one can hide from transactions and fraud. You tell me how that's inefficient. I was talking to someone the other day and we're speaking about, imagine the day we have no what's the word, hard currency. You'd be in a place where nobody can hide from not paying tax. Everything will be as transparent as possible. Imagine if Bitcoin became number one currency or the only currency of the world, or even a country. And let's take United States as an example. Every transaction would run through the blockchain. Every single piece of money would you be able to see. Anybody would have access to seeing where is money moving. Nobody will be able to avoid paying any tax. It'll be a fairer system. So you now tell me that this is a flash in the pan is almost laughable as a read. I mean, this is a Good Morning Saturday read that clearly this person has been asked to attend Davos, and this is because a set of world leaders sitting here and possibly listen to this person who doesn't know much about crypto. We need people like Tim Draper to be at Davos, or Vitalik Buterin or Charlie Lee. These guys know what they're talking about. There are better crypto YouTubers out there who know more than this guy. So interesting why he's been asked to attend. Interesting that he comes from New York, which is at the moment seems quite a negative place. I don't know if it's individually or state-run negative of Bitcoin and blockchain. But yeah, it's a bit of a joke story. I'm not a big fan of this. I'm not a big fan of this. This guy Rubini doesn't know what he's talking about. Maybe go and do some research and come back when you know more about blockchain, and you shall be converted. So I wanted to end on a good topic. Now we have the US government open for business. We want to go back and look at Bakkt. So Bakkt announced the details of Bitcoin futures contract. Let me just get rid of that. Much anticipated Bakkt platform by the Intercontinental Exchange has today announced further details about its Bitcoin futures product that was due to launch today. The forthcoming exchange platform will be offering physical delivered daily future contracts with the aim to bring greater regularity oversight to Bitcoin price discovery. The contracts will be tracked in BTC USD and will use the ICE electronic platform trading. However, Bakkt itself is still pending further reg approval. Well, hopefully come Monday we'll start again. Bakkt gives investors first glimpse of opening products. The Intercontinental Exchange has posted a list of details about the highly anticipated Bakkt platform's first product. The venture, which is expected by many to become one-stop crypto shop of sorts and aiding its regulated price discovery, is starting out by offering one-day physical delivered bitcoins, which means settled in bitcoins, which is good. Although there is nothing too dramatic in the details published earlier, for anyone hoping to trade using the Bakkt platform, they should provide further insight into the nature of the product offered. According to the market specifications released today, the trading screen product name for the Bitcoin contract offered by the platform will be Bakkt BTC USD daily futures. Each contract will be a 1 BTC in size. Price will be quoted in US dollars up to 2 decimal places. The minimum price fluctuation will be $2.50 per contract, reducing to 1 cent per Bitcoin on block trades of 10 BTC or more. Will be no upper limit on daily price prices and fees we charge at 50 cents, incorporating both exchange and clearing per side trading. They will, however, be positioned to limit 100,000 lots of any one contract. So a little glimpse. Obviously, we knew it was going to be settled in Bitcoin, which is good. So that's going to increase liquidity. Obviously, this was written a couple of days ago. So government is now open. Obviously, market is closed the weekend. Hopefully, the ICE can get onto this on Monday or next week at some point, and we can start again and approach the CFTC or pick up where they left off and get this approved. So what are we in now? 24th, 25th, 28th is Monday. Maybe by 1st of March or the first week of March, hopefully we're looking at Bakkt. I hope there's nothing else standing in the way, no more hurdles. So yes, looks very promising, and they're obviously just going full steam ahead. Nothing stopping this product. Obviously, they've invested a lot of money. They've also raised a lot of money at the same time, and people want returns. So let's look at the market quickly. I briefly looked at it a bit earlier. Clearly, the EFT had no sort of effect on this. The market's up 2 billion. Bitcoin is over 3,600. Let's see if we can get to that $3,700 mark. It seems to tail off at the end of the day normally, and if we can just stay above 3,600, which would be great. Everything is up until the maker, and then we're up in some losses. So what's the biggest? Hello is up again. It just keeps rising every day. So let's have a quick look at Hollow and what markets does it sit at. So yeah, Binance, probably the most notable one with the biggest volume of 15 million. Not really heard of Hotbit, not really heard of that. Let's look at this chart to see. So 25, yeah, not bad. So yeah, I'll try and make a video on Hollow today, do some research and provide you guys as much insight as I can. But it's obviously biggest price point was, it seems like, let's just go to all this, I think that's it. So 0.001, and we're sitting at 0.0, so it's almost at its all-time high, in fact. So maybe we need to wait for it to drop down. Its lowest point was, a lot lower. Interesting project. But anyway, I will leave it at that. Thank you very much for listening. Have a great Saturday, whatever you plan to do. Hopefully you're not working today. And I will see you on the next video. Goodbye.